This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The European Union adopted fresh sanctions against Russian oil interests on Monday, targeting traders Murtaza Lakhani and Etibar Ayub for helping Moscow to circumvent Western sanctions on crude exports that help to fund Russia's war in Ukraine. The EU has imposed 19 packages of sanctions so far, but Moscow has managed to adapt to most measures and is still selling millions of barrels of oil to India and China, albeit at discounts to global prices. Much of this is transported using a so-called shadow fleet of vessels operating outside of the Western maritime industry. The latest EU sanctions prohibit the bloc's citizens from doing business with the listed companies and individuals, reducing their access to shipping and insurance providers. The EU has listed more than 2,600 individuals and companies in total.
Oil prices fell on Tuesday, adding to the previous session's losses, as prospects for a Russia-Ukraine peace deal appeared to strengthen, raising expectations of a potential easing of sanctions. Brent crude futures fell 35 cents, or 0.6%, to $60.21 a barrel at 0720 GMT. While U.S. West Texas Intermediate crude was trading at $56.47 a barrel, down 35 cents, or 0.6%. Crude oil fell as the market weighed up signs of optimism on a peace deal being reached between Russia and Ukraine, ANZ analysts said in a note.
Moving on to the top news in the energy sector.
Global shipments of thermal coal, burned in power stations, have posted their first annual decline since 2020 on the back of lower coal-fired power generation in key Asian markets. Total seaborne exports of so-called steam coal are set to come in at about 945 million metric tons in 2025, marking a 5% or roughly 50 million ton drop from 2024, data from commodities intelligence firm Kpler shows. A 7% drop in imports by countries in Asia, the top coal-consuming region, was the main driver of the decline, and raises the possibility that global coal export volumes have peaked and may continue to contract going forward.
The volume of Venezuelan oil already headed to China before the U.S. seized a tanker off a South American country's coast last week, plus a glut of crude in storage and weak demand, will limit the near-term impact of the move in the Chinese market, traders and analysts said. Exports from the South American producer have fallen sharply since the U.S. seized a tanker off Venezuela's coast and imposed new sanctions on shipping firms and vessels doing business with it, with the prospect of further seizures deterring shipments. China, the world's #1 oil importer, is the biggest buyer of Venezuelan crude, though Venezuelan supply accounts for only around 4% of its total crude imports. Next, we have the top news in metal markets. Gold prices slipped on Tuesday, as investors turned cautious ahead of key U.S. jobs and inflation data, which could provide cues for Federal Reserve policy heading into the new year. Spot gold lost 0.3% to $4,290.33 per ounce, as of 0637 GMT. Bullion has rallied 64% year-to-date, smashing multiple records along the way. U.S. gold futures were down 0.4% at $4,316.40. We're right up against the former high around $4,380 from mid-October. So the market is essentially asking whether there's enough conviction to break higher, or whether this is a level where momentum starts to fade, said Ilya Spivak, head of global macro at Tasty Live.
Goldman Sachs on Monday raised its 2026 copper price forecast to $11,400 per metric ton from $10,650, citing reduced odds of a refined copper tariff being implemented in the first half of 2026 as affordability concerns take priority. Benchmark 3-month copper on the London Metal Exchange was up 1.4% to $11,670 per metric ton by 1838 GMT. Copper hit a record high of $11,952 on Friday on worries about tight supply, but then experienced a sell-off amid renewed fears that the artificial intelligence sector was in a bubble that was ready to burst.
We will now look at the top news in the agricultural sector.
France's Farm Ministry expects the area planted with winter soft wheat, the country's main cereal crop, for next year's harvest to reach 4.56 million hectares, up from 4.46 million hectares harvested this year, it said on Tuesday. In its first sowing projections for 2026, the ministry also estimated that the area devoted to winter rapeseed, France's main oilseed variety, will rise to 1.34 million hectares from 1.26 million in 2025.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.